Well, hello everyone, I'm Dr. Stock and this video is for entertainment purposes only. Today I'm looking at opportunities in the stock market, perhaps for dollar cost averaging, because we still don't know exactly what's going to happen with the markets in light of what we have going on with the debt ceiling. Evergrande still shaking things up, maybe a little bit, maybe destabilizing things in just a smaller way. I think the debt ceiling is a huge thing. Another thing that's in question is the infrastructure package. How is that going to play out for us? A lot of those things being in question means a lot of money question marks, right? So it means a lot of fear, uncertainty, and doubt for us. FUD, which, I've been thinking about this. I believe that there's an episode of The Simpsons where Homer Simpson, who's normally known for drinking Duff beer, I think that there's an episode where he ends up at a bar that's not, I think Moses, the name of the bar that he went to. I haven't watched The Simpsons since the 90s, but he goes to a different bar and they didn't serve Duff beer. They only had FUD beer. And so whenever I talk about FUD or whenever I hear about FUD or read about FUD, that's what I think of. So you guys, if you're Simpsons fans, go ahead and check that for me. Anyway, let's move on from there. That fear, uncertainty, and doubt, that FUD will mess with the markets, and we see that with our growth stocks, especially if we're looking at what sort of inflation we're going to expect. If it's going to last longer than expected, that's going to wipe out future profits. However, in the meantime, we have some plays that are getting a little bit cheaper, and we're going to take a look at just how cheap they're going to go. And there's some plays that I think are ones that actually have some opportunity in them. And if the timing's not quite right yet, I think that the timing is getting there. So I think that now is a very appropriate time for this video to come out. So with that said, let's get ready to rock. Welcome back. For those of you who are interested, down in the description you'll find a link to my Patreon. By going over to that Patreon, by using the link, you can sign up and you can see my dividend portfolio, my growth portfolio, also my crypto portfolio that I just added in there. I also have a private Discord that you can check out, a weekly newsletter, a weekly watch list of stocks. The investors that have already joined me they're just awesome, positive, passionate people who are just looking to make a solid financial impact in their lives, trying to improve their status and trying to secure that future of theirs financially. So if that sounds like something that you're interested in, we'd absolutely love to have you over at the Patreon, and I'd love to interact with you in the Discord. So check that out. Also down in the description are links for Webull and Moomoo. By signing up and depositing your money, you get free stocks, and I get free stocks for the referral. And then last thing for supporting this channel, the like button. Cover up your eyeballs like this, and then mash around till you hit that like button, subscribe button, and notification bell so that you can see anytime that my videos come out. All right, I've taken enough of your time. Let's move on to the stocks. All right, so the first one that we're looking at here is NNDM, and you can see from its price action, I mean, this thing was up to almost $18 per share, and then we just had some very hard resistance before tech and high growth sell-off, and we've recently started trading below the 50-day moving average, and it's acting as fairly decent support for us. It's kind of squishing down on this, but with this sort of sell-off, and if the trend is our friend, then isn't this going to continue selling off? Well, look at this sort of support that we're getting. As a matter of fact, let me bring up my drawing tools here. There we are, and I'll put a horizontal line on this. There's something that's really interesting about what we have going on with NNDM, and the thing that's of interest for NNDM is that they have a very strong cash position that sort of secures their stock price in place where it's at. As a matter of fact, I have a strangle options play on this where I sold a put and I sold a call, and as long as it doesn't move too much in either direction, well, I get to keep that premium and I don't have to buy any more shares and I don't have to sell my shares. So that actually puts me in a really good place. As a matter of fact, if I do have to sell the shares that I have with the covered call that I have written, well, then I make money on that. And if I have to buy the shares, well, my cost basis for those shares that I buy is somewhere, let me see, it was a $5 put, and then I think I got $9, so like $4.10 or something. So I could even take those shares, sell them immediately back on the market at around that $5 mark. Should that be something that's exercised, and that'd be something that would benefit me, or if it's not right around 5, as long as it's above that break-even point, I'm still good on the put side of things as well. So when we look at this, we're not going to drop much below that $5 mark, because almost all of the price that they have right now that you see in their share price is explained by cash. That doesn't count any of their assets or fundamental value moving on with NNDM. So even if you're not too bullish on what's going on, even if we don't see very much bullish momentum from here, the fact that we dip below $6 per share is a value that we keep on revisiting. So there's actually a significant upside for NNDM where we're at right now. And so this is something that I really think that you should keep in mind. So that horizontal line that I was talking about, right about there, we'll put that on there for you, where we just keep on tapping. That's about where the bottom is, and then it bounces back up from there. We keep on having that downward pressure where we don't see that same excitement. We are sort of capped on the top side of this because, and when I say capped, I don't mean that there's a hard cap where we have those resistance type numbers. Yes, we have resistance along the 50 period simple moving average. Also around like the mid to high sixes is also where we seem to be having some decent resistance as well. But the problem with NNDM and its share price going up like it has before in the past is every time there's been a major price rally for NNDM, there's been further capital raises and share dilution from NNDM as well. So it's one that I think that could provide a very quick return to us once it goes green again for NNDM. So I think that there's significant upside. So right now, as of yesterday's close, $5.56. So going back up to $6, that's about a 10% easy return that, in my opinion, we would see sooner than later for NNDM. And if the price does happen to drop below that resistance line that I have here, below that 523, then that increases the likelihood of those gains. So to me, it's a dollar cost averaging thing where we could actually have a fairly significant swing trade on our hands. So let me move on from there. I want to go over to Palantir. So what I like about Palantir is that we can see some of the prices that it's capable of. And if we zoom out here, we can see this previous high that we had. It's really setting us on this new path, this new trajectory, where either we're in almost like a channel, or even if we have a little bit of a bullish wedge forming up for us from this low to these lows to this low, and then also across these highs, that both the highs and lows keep getting higher. And if you look, we just broke down through both the 200-day and the 50-day for support, and it looks like we're landing on this line that I had drawn in here for a while now. Let me see, at the mid 24s or so, and then that was where we happened to find support yesterday. And I think that with this sort of sell-off, you can see the sort of lack of momentum that we have for Palantir from where we sit right now, and we have a lot of room to fall down, possibly down to like the 20, just under $24, and then after that we have a bit more room down to about 22, 23, and then down to about 21. I don't see us getting down that far. I think that this is one that if you're looking for a position in Palantir, or if you're dollar cost averaging, after this sort of sell-off, that puts us in a really good position for Palantir as it continues to move in a very bullish way, especially recovering back up above those previous support lines. They could act as resistance for us depending on where we fall over the next few days. We're going to have to watch that. We're also going to have to watch the volume for Palantir moving forward from here. The next one I'm particularly excited about, and that's Draftkings, because for Draftkings, we just, as of yesterday, fell into oversold territory as we dipped down below $50 per share. And this is one that has an average analyst estimate of over $70 per share, which is incredible for us because that's about a 40% upside from where we closed yesterday over the next 12 months for Draftkings, if we happen to put in that sort of price action. If we zoom out a little bit, you can see that the lows keep moving upward. Good for us. We can also see that the highs keep moving upward, also good for us. And you can see this sort of double bottom that it made, which led to that bullish movement, and then we sort of failed right around $64 per share. And this is one that I think as the market recovers, we're going to see a very sharp recovery for Draftkings as well. And I think that we're going to see very positive things over the long term. In the near term, that NFL season, the college football season, I think that that's going to translate very well into very strong revenues for Draftkings, and that I think we're going to see a very positive Q4, and that we're also going to see a very strong Q1 2021. Oh my goodness, Q1 2022 coming up. So I anticipate Q3 to be okay. Q4 I think is going to be great, and then Q1 of 2022 I think we're also going to see some of the momentum moving through for it. So the Draftkings, definitely bullish on it, and I think now where we're dipping into that oversold territory. So look here, oversold, and then the price ripped back up. Touched on oversold, the price ripped back up. Now again, we're touching on oversold, and well, we'll see if that price happens to rip back up on us. and we do have to pay attention to the overall market bias because we still don't know about the debt ceiling. We still don't know about the infrastructure package. We don't know what sort of spending is going to happen. And so because we don't know what's going on with that, we don't know how much more we're going to get janked around in the markets. So that's something to keep an eye on and to keep watching. But for those of you who already have positions and are looking at dollar cost average, I mean, for me, I was not adding to my position above $60 per share. However, in the 50s, I absolutely did. And now that we're down in the 40s as of yesterday's close, I think that today is that day that I'm going to add to my position again as we're under $50 per share, because I think that we have a really good chance of spiking sharply from here in the near term and over the long term. And I think that both of those things are very good for where my position is, my most recent position, and also moving on from there. And I think that there could also be some significant options plays, whether it would be selling puts and collecting the premium, or if you even sell a put and you get assigned to buy those 100 shares, that even further lowers your cost base because that premium plus that price that you came in at. So that could be, I mean, to me, there's just a lot of incredible opportunities here. If you're somebody who more enjoys the idea of the leaps where you want to take a long-term position, you could certainly do that, and then you're committing that sort of price, but you don't have to commit the same amount of cash to like a cash covered put, for example. So the only money that you tie up for that call is the money that you spent on that leap option call. And after that, you have absolutely no obligation to actually exercise your right to buy those shares. All of the rights are in the buyer's favor for options, and then all of the obligations are on the seller's end, whether it's to buy or sell those 100 shares per contract, depending on which way you go, if it's a call or if it's a put. In any case, this is not an options video, but I do want to just bring that to light. I think that Draftkings is going to be incredible over time. I see it as a very strong market leader, and I think that it deserves my cash. So it has my cash, it has my investment, and I do have a small options play on this, and it is one that has a fair amount of time value left, and it's a little bit aggressive, and there's not a lot of money that's on the line for this one, so it is just in my opinion, a small risk, very, very tiny part of my percentage here, but it's one that could stand to have a pretty significant return on it as well as we get through whatever the heck is going on here at the end of September and into October. And as we rotate out of that, I think through the end of October and into November, I think we're going to see some really strong price action, not only for DraftKings, but also with tech, with high growth. I think that we're going to see the market turn around for us. I think it's going to be a beautiful Q4, even in the crypto space, and I think it's going to carry into at least Q1 of 2022 as well. So let me summarize. NNDM being under $6 per share, I think that it could honestly provide a decent return over the short term, and I do have a long-term position in NNDM, and it's one that I plan to hold on to see if they're going to show us that sort of growth that we believe that they're capable of, whether they are the ones doing the acquisitions with that significant cash-heavy position that they have. We would absolutely love to see them actually go full commercial scale like they've been telling us that they're going to do. As we rotate out of the pandemic, the Delta variant was sort of a mitigating factor again, but investors are going to get impatient. We have that sell-off. We would like to see action. We would like to know that our money is not misplaced. So as a swing trade opportunity, NNDM is there, and there is still some long-term potential, but it is a very speculative play at this point in time, so that is significant risk for anything long-term. Palantir might be trading still just a tiny bit rich. However, it has sold off significantly. It might sell off a little bit more. We will have to see, but coming so significantly off its highs in the near term, I think is a good thing for us. Finally, Draftkings. Draftkings, in my opinion, is getting about as cheap as we're going to see it without significant market influence for DraftKings. So that's something that I think for DraftKings, it would take market influence to push it down lower out of the high 40s. If we see mid to low 40s, for me, I am going to load the boat on DraftKings because I believe that it will turn around on that price action. And if we see those sort of low 40s, which I doubt we'll see them again, but if we do see them, I don't think that it's going to be company specific. Instead, I think that it would be more market related that we would see that happen. So that's what I have for you guys today. Thank you so much for watching this video. I really appreciate it. If you want to come join me over at the Patreon and also meet my investors, they're awesome and incredible people. Super supportive people that just love investing, love talking about money. And if that sounds like something that you're interested in, come on over and join us. We'd love to have you over there. Moo Weeble, sign up, deposit your cash, get your free stocks, and thank you for the free stocks. That like button, eyes wide open, and just a very deliberate press of the like button, a very deliberate press of the subscribe button, and that notification bell. Ring it, ring it, ring it, ring it. Let me see. There's something else. Ooh, I know. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.